Hey everybody, Gary with Basecamp Trading. One of the questions I get asked a lot is how do you recognize a trending day versus non-trending days? Well, there's really two things that I usually do as far as determining a trending day. The first thing I do is I look at what's happening with the 30-minute opening range. So, and this is primarily for the indexes, but all markets really, but especially on the indexes. And you can see this right here was our 30-minute bar. This was our 8:30 to 9 o'clock bar, which is Central Time. I'm Central Time. That's the market open in the first 30 minutes of the market, my time. And usually what I do is I'll just go ahead and I'll bracket it. Just go ahead and get the right indicator. And then I'll just go ahead and bracket right there. So there's your 30-minute opening range. And then once you start trading and trending above or below the 30-minute opening range, you know you're trending for the day, or at least for that time period. The other thing that I look at is I follow the EMAs. What's happening with the EMAs? You can see today was a strong bullish trending day. We didn't get one single close under the 5 EMA today until right there at the very end of the day. This was the closing bar at the end of the day. But you can see throughout the entire rest of the day, we either were touching it, breaking under it, and then right back above it again. And so when you see this, you know that you're in a bullish trending day and you want to take bullish setups. See, compare this to like yesterday, for example. Here's yesterday. Look, we were all over the place on these EMAs yesterday in yesterday's trading. See, we're above and below, back and forth, kind of all over the place yesterday on those EMAs. This was not a very good trending day. And that's one good way to recognize that. And then also, same thing right here. This was our opening range bar, 30-minute opening range. And you can see we broke underneath it, but just kept breaking, going back, breaking, going back, breaking, going back. Then we got above it, kept breaking it, going back, going back, going back. In fact, I can go ahead and put that on there just so that you can get a good visual of what that actually looked like. And see, this was our 30-minute opening range bar channel. And see, we broke under it, went back above it, broke under, in it, above it, back in it, above it, back in it, stayed above it a little bit, and then back down in it, above it, back down in it. You know, just not a trending day, not a good trending day. We're on both sides of the EMAs. You can see just not a really good trending day. Again, in comparison to today's trading, which was a nice strong trending day. And so when we see this, and as long as we have not had a close under the 5 EMA on the 30-minute chart, our smaller time frame charts that we take our trades off of, we are really only interested in long trades. And here's a good example of what that would have looked like today. See, right in here is where the market opened. And look, we had a slow line zero touch off the moving averages, another or a fast line zero touch, another fast line zero touch off the moving averages, little consolidation, slow line zero touch off the moving averages. We broke resistance to the upside for a nice push, went back into a little consolidation, another slow line zero touch off our moving averages and out of the cloud for a nice push up, another slow line zero touch off the moving averages for a final push up into the day. Now, we were very extended. We had gotten really extended on the 240-minute chart. You can see we got significantly overvalued there, deep in overvalued territory there and there. So we were extended towards the end of the day. And so honestly, even though we were in a trending day, I didn't take these last couple moves up because I'm not one to chase an extended market. Obviously, they would have made money. No question about it. Would have made money, but we were very extended at this point, so I'm not trading these. Again, I'm not one to chase an extended market, but again, you could see, on a strong trending day, anything short was not working out. Um, and throughout the room, because we were extended, we were looking for potential pullbacks, but we kept saying at this point, anything short is counter trend. And you can see if you were trying to trade short, you just were not doing well. I mean, nothing short worked out very well today. This was a bullish trending day. And so on days like this, you just want to concentrate on long setups and don't worry about the short ones. Because again, you can see shorts were not working out. Now, if the trend had changed, then that's a whole different thing. Then you can consider taking shorts or something. But today, again, 30-minute chart, not a single close under the 5 EMA throughout the entire day. I mean, this was a strong bullish day. So just concentrate on long trades at this time. That way you don't get chopped up and don't have to take a bunch of losses. So again, a really strong bullish day, inauguration day, lots of probably inauguration euphoria and all that, but a bullish day in the ES today.